Hello guys, Sakida here. So I'm here to show you how to trade the silver bullet gold for passive income, for daily income. Gold is one of my go-to instruments whenever I need to make like a quick bucks. So I'm going to show you the daily cycles, market maker models, the silver bullet, the second stage distribution, how easy it is to catch it, and how quick it is to move from your entry to the destination, which in most cases it's the original consolidation lows or highs or original consolidation liquidity. So I'll be teaching you guys how to trade and how to use relative equal lows and relative equal highs as a draw. Daily cycles, by the way, just time before price, obviously. So you've been in an uptrend like this. So on the top left, I have a daily chart on gold. Yeah, even on a bullish day like this, I'm able to capture and make money, and being a seller, but at the right time of the day. Okay, so that's what I'm going to be showing you here. So we are trading above previous day's high when I took my trade here. This is the daily chart. So it was rallying, it opened, went low a little bit, and then it rallied and came the right time because now I'm trading at all-time highs. Okay, so when you're trading at all-time highs, you don't really need like a daily chart. You don't need like a monthly chart, a weekly chart, 4-hour chart. You need the new information that's available to you on a smaller time frame. So here I have um 3 o'clock, 3 o'clock. So you're just gonna be focusing down here, 3 o'clock. That's when the silver bullet hour begins. So I'm going to be showing you, I was up, the price was up there at 3 o'clock, okay? So what happens at 3 o'clock? We know it's a silver bullet hour. So I don't need, because I was at all-time highs, I don't need to refer to a daily chart. Okay, sorry about that. So I look at the smaller time frame, which is 1 minute. At 2 o'clock starts or begins the London open session, the Q zone, right? So we opened at 2 o'clock. We took sell side here, sell side there, sell side here. We made relative equal lows with this low, and then we rallied. So we've been rallying, and then we retraced, generated more sell side here, and then continued to rally. Then at the right time, which is 3 o'clock, silver bullet, because I was waiting for the silver bullet, okay? I waited, and then it went lower, retracing into a 5-minute fair value gap, and this fair value gap, I wanted to see price after 3 o'clock closing below this inversion fair value gap and breaking that low, creating a change in state of delivery. And it did exactly that. And that was after taking buy side above here. The market gave us a new CB. It gave me a new CB in confluencing with this bearish, this BC on the buy side of the curve, right? Because I'm looking down here for my target, relative equal lows, a discount of this price leg, because I'm looking at the London range so far. We opened right here, we rallied. So I'm looking at discount. What do I have? Relative equal lows right there, okay? When price broke with displacement to the downside here, creating a new bearish market structure shift after changing state of delivery right there, I was looking for this fair value gap. I also noted that one, but it was a kind of a risky entry to me. I wanted more confirmation, and I got that. So this is what I took during the silver bullet hour. Now we're inside the silver bullet hour, right? And I have these relative equal lows as my draw. I also have this low hanging fruit relative equal lows down here, which is where I actually took my first partials. So I'm now going to show you the first entries when I was entering, but on a 5 minute. This is how it was look. This is how it looked like on 5 minutes. So that's how it looked like on 5 minutes. And I was entering. Look at where I put my stop loss. I already had these candles here. This was a bearish order block on 5. So I was entering, put my stop loss above these highs here, because I also have this as a bearish order block on 5 minutes. Okay, so I'm now going to show you when it was moving now from my entry to these relative lows, you can see I was banking partials at low hanging fruit. We are also inside this fair value gap here. This is also part of the discount that I was looking at. So looking at the low that was created from London to the high up there. So discount, this was a discount. So that's why I took partials below those lows here, because I was already at discount. So I'm moving from premium to discount, okay? And I also took something off right there. I also took something off right here. So that's what I was looking at. That's also how I trade the silver bullet. A bearish market structure shift inside the silver bullet hour is to be very it's to be respected at all times. So here, sorry, these are the profits, running profits on my entries before. I think this was before I banked some partials, and then I banked some partials right there and there. So I actually got trailed out here on this retracement, but I think I made around $500 from that trade right there. Now fast forward, the New York session came. So when we are trading the New York session, remember we still have buy side from generated buy side, this high and this high. These are relative equal highs. So if you see this green line here going all the way to my left, you know that that's the high I'm referring to, this high and this high. So this is now relative equal highs, but just let me give you like context, okay? Okay, so this is a New York session. This is New York session. Okay, I'm getting a phone call. Sorry about that. So the New York session begins at 7 o'clock, okay? But I like to take trades after 8:30. I'm gonna give you my reasons. So basically 7 o'clock is when the new liquidity is being generated in the market, okay? So you can look at the highest high and the lowest low between 7 o'clock and 8:30. That's what normally that's how I do it. If sometimes I do find an entry between 7 and 8:30. If maybe 7 o'clock we run a high and then we create a bearish market structure shift, and there's something I can target, that's very obvious from the previous session, then I can take that after 7 o'clock. It's okay. But this is the most exciting part, and today you'll see why that is, okay? So 7 o'clock begins, the new liquidity is being generated in the market. New liquidity is being generated in the market. So you have a high, you have a low that's being created or that's being generated. Liquidity that's being generated between 7 o'clock and 7. So I keep on getting phone calls here. So I'm being distracted. Sorry about that. So you can see this high and that low. So I start hunting after 8:30, because 8:30 starts the hunt. It's algorithmic. It's not me who starts the hunt. It's the algo. So I follow the algo. I study it. Okay. So at 8:30 there were news today. So that's why the algo starts hunting at 8:30. It's just there. It's predetermined. Okay. You can check your calendar, and you'll find that in most cases you have news at 8:30. So they use that to search for liquidity. Okay, sorry about that. They use that to actually target liquidity. So we opened at 8:30. This is the 8:30 open. You can see I extend. I always do. I always extend the 8:30 opening price right there. So I study what did price do since opening. We have a high, we have a low, right? Price opened, rallied, never took this high. It never also took this low, but then it rallied, came all the way back down, went lower, so it was just in between the range, okay? And then it went higher to offset these guys here. So I was waiting, I was ready to take it lower from here, but I wanted to see, okay, does it give me like some sort of bearish market structure? Now, mind you, I have how many candles? Okay, this is the last up close candle. that I have. Okay, now I need something substantial. So if I were to look for a bearish market structure shift, I'll have to wait for this low. That would be a strong one. But now then, if I'm targeting these lows, it's already a discount. I can't take it, you know. But if I got like a new bearish market structure shift below this low here, I was gonna take that and risk put my stop loss above this high, you know, because this will then be high resistance liquidity run. You know, this high will be protected because it has liquidity, right? But look, it went higher, came all the way back down. I was studying this CE here, so it rejected at 0.75 week CE. Now this is when the market maker started. That's a stage accumulation right there, and then it pushed higher, and then this is what I did. When we went higher above here, I wanted to see some sort of like a clean fair value gap. And then when it went higher, I extended this bullish breaker here. I have a low, I have a high, lower low. Now I have a higher high, but it's not clean. I want something clean. And then this fair value gap came. So I was trading the reaccumulation, the second stage. I traded both second stages of this market maker model. So this I bought this fair value gap and I targeted these relative equal highs. Now, mind you, we are already above the liquidity that was generated between 7:30, but I have something obvious on my left. Relative equal highs, this high and that high that I pointed out. This is how it looked like, this high and that high. Okay. As it was running, I actually caught, but this spike here, you'll see on my execution, this spike because I was onboarding my positions and adjusting my take profits because I was putting my take profit below the breakout low here. The one stop loss got hit here because it was just I think I put it somewhere below this low. It got hit. Excuse me, it got hit, and then I put more positions. Now let me show you. You can see on my executions right there. I was buying that fair gap, and I was pushing, and I took 80% off uh, at the highs there. So I was trading with an idea that it might want to continue because you know, with the elections coming, it might not want to come back right now. It might want to create a new all-time high, then drop later. Okay, so I left some runners, as you can see on this. Okay, so these are the profits. This is the profit that was now running on this trade, but you'll see on my last screenshot, I have trades that were stopped out when it melted. It was going lower here. You know, the first stage. I mean, the when it created this low risk sell and the first stage distribution going lower, I got stopped out because I had my my runners. I left some runners on this position, but obviously yes, I did take out 80% off, if not 75 or 70 of my trades off here. So there was me trading the reaccumulation of this market maker buy model. As soon as I saw, okay, now it's breaking below this, so now it's employing things that that should have been used, to push price higher, and then we are breaking now lower. Mind you, it's after 8 o'clock. We have relative equal lows. This low created relative equal lows with Asian lows down here. So I'm gonna show you that so in a bit. And then it melted like that because I was actually watching that. I said, okay, I'm watching that bearish breaker when it was breaking lower like this. I watched it because I couldn't get a feel. I was watching this family gap. I said, okay, fine. If this family gap holds, if it comes all the way up to this family gap, then I'm gonna go short. Okay, because I was watching this bearish breaker here and also this breaker. But then I couldn't get a feel because it couldn't come all the way up because actually this area here is actually a balanced price range if you think about it, because price, look at how it painted up and down here, because remember the algo refers to the numbers, right? It doesn't refer to the gaps like how we see them, right? We are just employing the use of candlesticks to understand how the algo thinks or what the algo sees. Okay, so look at that area here. When all painted countless times. So it takes a lot of strength for price to break such areas. This is a balanced price range. Buy side has been delivered, sell side has been delivered efficiently in this range. And then look at how we broke that range. Displacement to the downside. Now there's a bearish breaker here. As soon as I saw that, okay, this bearish breaker now created a bearish order block because I was waiting for a fill up here. I couldn't get it. And then it created a bearish order block. As soon as this candle here closed below that outclosed candle, I went short right then and there. That was my second stage redistribution entry. I was targeting the lows here because you have relatively cut lows. You'll see on my executions. It was just beautiful, you know. So I caught the two stages of the market maker, the two second stages of the market maker model, the second reaccumulation and the redistribution. And now I'm going to show you on my um this is the trade that I took here. It only went 200 bucks, and then I'm going to show you the executions now. So you can see on these executions the reaccumulation, the buys that I took. You can see even the down areas, the red areas down here facing down, that I was actually being trailed out as I was putting my positions in and adjusting my stop losses. And over here you can see that the reaccumulation or the first stage distribution was actually trailing out my runners because they were now at break even. Okay, and then as soon as I saw that, even here you can see even on my MT5 screenshot that I was actually watching this bearish breaker also. You know, as soon as I saw that bearish order block close, look at my error, I went short right then and there. So a guy from my Discord asked me to explain my second entry. This is the second stage distribution. You know, this is a redistribution, and it just melts like that. It's so quick and easy. So these are the price levels. This is the opening price of this bearish order block, and this is the closing price of this candle. You can see the numbers right there, the difference. That's what made me go short right there. So, and then it went all the way down. It went all the way down. Yes, we did have some sell side because I was thinking, okay, maybe they want to upset the guys that are holding the longs. You know, the election is gold. You know, gold is gold. And okay, as soon as I saw it retrace to that fair value gap, coming back all the way down and closing below this inversion fair value gap, I said, okay, I think it's ready now to, you know, continue lower. I went short, put my stop loss just above this inversion fair value gap, and I got trailed out right there. So this is like, I don't know what that like market maker. That distribution, but I'm kidding you. You know, sometimes it does it goes, you know, sometimes it does go below the original consolidation lows or the original consolidation. So I ended up making like uh 1,000 USD on these trades, you know, altogether. So it was just a beautiful day in the office, I would say. You know, gold delivered. It could have been more, but it's me versus me, and it's you versus you. You know, you don't need to look at, you know, my pockets. You focus on your pockets, all right? So yeah, that's it for gold. And I also want to review this German 30 today. So I took this trade with the bootcamp guys. And I just want to touch a little bit on the bias here on the daily. You know, it's very important that you note on the daily chart how Tuesday closes, the Tuesday daily candle. Because here you look, we took out Monday's high on Tuesday, but we closed back inside the range. In most cases, Wednesday will just go the opposite direction, or it will just be a continuation. So today was a beautiful, beautiful uh example of the of Wednesday being a continuation day, you know. So this is like a weekly profile where you get like Wednesday and Thursday sometimes being a continuation, then Friday it retraces. So this is the daily chart. I'm now going to go to the 15-minute chart and show you what I was looking at, because that retracement actually happened during my trading or the kill zone, you know, that I use. So Okay. This is not a premium or a block on 15. It's just a fair value gap. But on a smaller time frame, because I was looking at the swing high, the swing low, and we had premium. So at premium, we have this imbalance here. So we just swinged during the opening bell, just swinged to this imbalance, and then there was a bearish market structure shift. Now I'm gonna go to the 5-minute chart and show you what Saikiro was looking at right there. Okay, I don't know what's happening now. Oh my goodness. But yes, it after that it went all the way down because you remember it's a continuation, you know. Wednesday being a continuation, it melted the whole day. But everything started when? On the daily chart. Okay, I don't know what's happening here. Only okay, there you go. Sorry about that. So and then on 5 minutes, this is what we had. So this was a bearish order block on 5 minutes. Okay, so this is today's price action. Remember, we have a swing high. This is a dealing range, swing high, and a swing low, and then you're retracing to above equilibrium. You are now at premium. What's the first PDRA? That family gap with the premium order block. Now, this what time is this? 3 o'clock. Because this is DAX. The opening bell is at 3 o'clock. We open, you anticipated your swing at 3 o'clock. Now, I did not know that we had these news. I did not check. I did not check my calendar. It's not that I didn't know. I didn't know because I didn't check. I know these things. But today, I just forgot to check. And then I was that on 5 minutes. Now I'm going to take it to 1 minute and show you um, what exactly happened or how everything unfolded on the 1 minute. Okay. So this is the premium order block on 15. We open at 3 o'clock, the opening bell. We open at 3 o'clock, we just seeing we take out this buy side short-term high, and then we create a bearish market structure shift right there. Displacement. This is what you want to see, right? I'm now going to remove this. So you have a bearish breaker here. We retrace to that bearish breaker, and then you also we are above midnight open. Midnight open is somewhere. Yeah, somewhere here. Where is midnight open? Midnight open, midnight open, somewhere here. You want to be a seller above midnight open, right? Okay. I'll just leave it like that. Don't have time for it. Now you are watching price is above midnight open, right? What does it do? Creates a bearish market structure shift above midnight open. We're already at premium. So I was looking at the relative equal highs, you know, because this displacement, this pushback, I didn't like the displacement it went with, you know, retracing to that bearish breaker. I said, oh, I'll wait for something below this because you know, society will be I'll be still having some, you know, distance between my entry to, I mean, my draw to my drawn liquidity because I also had relative equal lows up down here. I said, okay, we could push higher, take out this high, maybe start to drop later on, maybe around 4 o'clock. I said, no, I'll wait for something here. And then when me and the team, when I saw price breaking and closing below this inversion fair value gap, and also turning this bullish breaker here and making it an inversion closing when it closed below the inversion fair value gap here, I said, okay, I'm watching that fair value gap and this inversion fair value gap. I said we went short right there. I put a stop loss above this breaker, which was a bullish breaker because you have a low, high, lower, low, and you have a higher high. But now once you close below that, it can be used as a bearish or a bearish PDRA, right? And look at how it respected that. So it went all the way down because it also had news. I don't know. Okay. This was just news, but there was a time distortion before it melted because we had news. The ones that I just mentioned or pointed out on the previous slide. And then it melted, it went to draw, and people made money on the boot camp. Okay, the boot camp guys made money. I canceled my trades personally. I did, yes. When this was happening, I said, okay, it's spending too much time at entry. I was just offloading my positions at break even, and I just broke even with this. But look at this. Oh my goodness, this is crazy. And even now, it's trading just somewhere around here. So I'm just reviewing this. You go back and you do your own study, you do your own annotations, and you tell me how are you going to trade this setup. Share your setups on my Discord. Tell me if you also notice maybe the entries that you would have participated in. Yes, normally if my everything is clear, this is my entry right here. Yes. But today I was just, skeptic. I said, let me wait for something more, like more. I needed more signs, more confirmations, and hence I ended up taking that bearish inversion family gap with that new family gap created right there with this bullish breaker being an inversion. Okay, and normally if you have a breaker as part of your setup, you want to put your stop loss above the breaker high because look right there. Let's say you were swinging it or you're holding. If you did not put a stop loss, maybe on some brokers, even if you put your stop loss above the breaker high right there, you are going to be trailed out because of the spread. Okay, so you want to give it a little room to breathe, and then yeah, you leave it, and then you set and you forget. All right, that's it for today, guys. I hope this one was very insightful. See you guys on the next one. Cheers.